2 Fridays ago, we had some news from Donald Trump, the president of the United States, that tariffs were essentially back. And since then, we've had very conflicting back and forth posts from the president, from the Chinese president, President Xi, and other, administrative people within both sides. There's been all sorts of commentary on whether or not the tariffs are back. And in this video, we're going to ask a single question about the state of this market. Was that all we're going to get? Or is that just the start? We're consolidating and we are going to break lower from here. Well, I'll share my opinions on this in today's video, as well as give you some insights, not just from a technical perspective, but from a technical, fundamental, and a sentiment perspective about this market. And stay tuned for that, as there are some very big cues that we are getting from crowd sentiment right now. And hint, people are pretty scared out there. I'm seeing all over social media that people are worried that there is more downside to come and that was not the end of it. But we'll talk about it in this video, and I'll give you my educated guess and trade setups that I'm looking for going into the week ahead. If you enjoy my videos, consider taking a second to subscribe to my channel and hit the thumbs up button if you have not already. So let's take a look at the monthly chart to start things out for the stock market. And just a reminder, we will be taking a look at stock indices, but we'll also take a look at the VIX, we'll look at the dollar, we'll look at gold, and we'll look at some other currencies as well. So like I said, make sure to grab a drink, get your coffee, whatever your drink of choice is, sit back and let's get into some charts. So first of all, I wanted to talk about the S&P 500 monthly chart. So what we have here is we have a higher time frame uptrend that I would argue is still intact. The bears are back across social media. There's a lot of worry out there. And not to say that there's no reason to be. There is reason to be concerned. I mean, if trade war stuff does flare up again, we saw how quick back in March and April that can cause a market slide. But I'm going to go out on a whim and say I don't think that either side is very keen on a full-blown trade war. Could it still happen? Sure. Are the probabilities high that we're going to get a full-blown another move like we saw in April? I would actually put it at a very low probability. And if we just administered a price action, what we can see here is that structure is still intact. We have higher lows and higher highs still playing out on the monthly candlestick bar, which I talk about in my videos because it's a really simple way to go bar by bar and to ask the question, are we still in an uptrend? You can do this on the NASDAQ, same thing, higher lows, higher highs. Dow Jones, also same thing here. We have constructive upward trends in the major US indices. From a price action perspective, this has led me to be a buyer on dips, and I actually am specifically, disclosure here, I am long the NASDAQ currently. So I have a trade long the NASDAQ. I bought this actually on this Friday candle here. Full disclosure, I had a stop loss initially here. I have since trimmed my stop loss here. And on Friday, we had a very interesting candle print, one that suggests to me that the path of least resistance continues to be the upside, not just from the monthly chart, but also on the daily chart. Let me explain. So on the monthly chart, we recognize that we're in the context of a higher low, higher high sequence on the monthly. We saw this sell-off, and I actually got long on the NASDAQ partially because of what we were seeing specifically in crowd sentiment. Let me show you what I mean by that by going to the put to call ratio, and we're just going to look at the S&P 500's options flows for that day. Reminder, that big day was October 10th. That was a Friday sell-off that we saw into the weekend. And what we can see here very interestingly is that when we look at October 10th, there's that sell-off in the S&P 500. Look at bearish sentiment. This is the put to call ratio, and we saw a huge kind of flush to the downside, and with it, a lot of bears came running into the market. Sentiment got very quickly one side of the boat. Everybody rushed to the bearish side of the market and bought puts. They sold their shares, they sold their crypto. A lot of people who were on high leverage got liquidated. And again, I don't say that light. I know that's a very painful thing for a lot of people. But the reality of markets is that when there's a liquidation event or an all out kind of selling moment, a lot of times, if the conditions are appropriate, there's opportunity there. And so I actually went long with a stop loss below structure, and this trade has worked out well for me. Let me not just show my winners. I did also buy Bitcoin, and that did not work out for me. You can see what initially did hold up as a nice bounce, ultimately moved lower, and I stopped out below those lows for a loss on Bitcoin. So I do want to make sure that my videos. I'll show you my wins, but I'll also show you my losses. So Bitcoin, I was early on the idea. NASDAQ, we're doing just fine on. So on Friday, let me talk about the daily chart again. We came down and tested this area. My stop loss initially was below this structure area here. I trimmed it because we had a clear response on this day, that Tuesday of last week, and then another one on Friday. A very nice scoop of the lows, pushed through, and we actually closed at the upper end of the weekly bar. We can pull that up on the weekly chart, and you can see that overall, we actually had a pretty constructive week to week candle change. So this to me looks very constructive, and I remain bullish on a technical basis. But what about the macro? Well, if I come back again, it's sentiment that really kind of triggered an execution for me for a trade. But if I go back to my market scanning tools here, what we can see here is that we're getting a lot of confirmation from the software that I'm using, the Edge Finder, to find bullish setups. So technical signals are looking bullish. We have seasonality that looks really good. Trend is bearish to mixed. We also have institutional activity. The commitment of traders data shows institutions are still very long the NASDAQ. Sentiment, again, we just got done discussing that crowd bias was bearish, which generated a bullish signal for us. Economic growth metrics still look promising with strong GDP, PMI numbers, retail sales numbers coming in strong. Jobs market, not so great. Inflation data looks pretty solid in the sense that interest rates are still expected to come down. So that's the macro. That's the backdrop for the NASDAQ. Now, I know we did a very quick summary of this, and we could spend 30 minutes just going through all of the macroeconomic data. And of course, you can do that. We have the tools within the software to make that easy to do, right? We can look at that stuff in more detail. I mentioned GDP numbers, inflation statistics, right? PPI also came in better than expected with a lower than expected print, suggesting the Fed could continue to cut interest rates. So I think you have a story here on the macro where, yes, you have some slowdown in the jobs market. That's probably the easiest place for people who are cautious to go, is to say, jobs market doesn't look so great. Well, yes, that's true. But you also have some good growth metrics. Let me show you what I mean, because I do think it is important that we, actually extrapolate why we're bullish, right? From a macro perspective, look at GDP growth. GDP growth has beat expectations handily for the second quarter. I expect that to continue, and also for that to generate good income good earnings reports for the big companies of the United States. Remember that GDP growth being solid usually equates to a stronger corporate earnings environment, which is ultimately what drives NASDAQ and S&P 500 and all stocks kind of higher, right? So the story on the macro still looks promising. Price action looks good. I'm bullish until proven otherwise. I've made some posts here recently about how a lot of people are really scared by the tweets and posts that are going out from the president, and understandably, it's pretty volatile out there. But my approach to it has been to focus mostly on the three things that I talk about often: technical analysis, which we discussed just a moment ago; sentiment analysis, which is looking at the crowd and actually being contrarian there; and then also fundamental analysis, or the macro, looking at the growth of the economy, looking at jobs, looking at inflation, and building a story there using the tools that we just got done discussing. So NASDAQ for me remains bullish until proven otherwise. Let me quickly elaborate what I mean by proven otherwise. If we fail out here, meaning we come down and start to break levels of support, like for example, the 23,800 level, the 24,000, if these levels start to get violated, then you have a different setup in terms of technicals, in which case you actually look pretty toppy here. So I don't think the market is at a top here. I think you may have room for this thing to actually continue to bolster higher until proven otherwise. But if you do start to see a failure of support levels, then we'd have to potentially adjust our thought process. Specifically, I'll give you a short-term idea. If we come down and take out these lows from this past week, if we start to break through those lows, my logical conclusion would be you're likely to come down, test 23,800. And if that breaks, you're likely to come down and hit 23,000. Now, these are longer term areas where there actually might be some good dip buying opportunity. This would be, that's a move of 8-9%, which again, given the circumstance that I just gave you with the macro and such, I would actually think that's a good buying opportunity longer term. But from a trading perspective, short term, if we break through these levels, again, I think you could have a move down to 23,000. But path of least resistance for me in the short run is bulls are still in control on a technical basis, and I like the macro. Same thing with the S&P 500. We hit the 50% retracement. Actually, we hit the 61.8% retracement and bounced from there. On my setups here within the Edge Finder, let me just pull this up really quick. We'll go to our top setups, simple view, and I'll show you which indices I like the most. So S&P 500 is getting a bullish rating, but NASDAQ is getting a stronger one. So that's why I chose NASDAQ. I also liked the price action a little bit more. I thought it was really clean, and I like the tech trade still. I know it's a very, people are worried about the AI bubble, etc. But to me, I do think we are in an AI bubble, but I don't know where the end of that, and I think it's a fool's game to try and call the top on AI. It's very exciting technology, and there's a lot of money pumping towards it. Where the end of that money flow is, I can't tell you. And so instead, I trail stops, I follow the trend, and I look for signs that that trade is ending, not trying to predict when it's ending. So anyways, when it comes to NASDAQ, that's my favorite of the setups that I have here on my list. Let's also now take a look at the dollar index, which pulled back this past week. So we pulled back into the 618% retracement. Notice how we wicked below it, came back in, and still look constructive here. I remain pretty bullish on the dollar index in the short run. As I've been talking about in my videos the last few weeks, what we've seen is if we pull up the economic heat map for the US specifically, we can see that the US dollar is getting a modest score of 56% of our readings, giving a favorable or bullish outlook for the US dollar. This column here that you're looking at, this looks at all of the economic data for you and generates a bullish or bearish idea for the dollar. We can do this, by the way, for lots of different countries. We have the EU, UK, Japan, Canada, Australia, etc. So anyways, big picture here, I still think the dollar has some strength, but you might say, well, that's not a very high score. But remember, currencies are all about comparing versus their peers. And the dollar actually has, in my view, and my system's view, a relatively decently strong score. The only one that matches it right now is Japan, with the Japanese yen getting a similar score. So I would actually be looking to be more interested in long the dollar, short things like the euro, short things like the Canadian dollar, short things like the British pound. And again, that's just simply taking a look at our economic strength meter and looking at things that are weaker versus things that are looking stronger. And how we measure this, if you want to read more about this, you can find it on our website. By the way, if you ever want to explore the full list of features, just head over to our website. It's just a1trading.com, and you can actually just find a ton of tutorials and guides. If you hover under Edge Finder, just go to tutorials. And I mean, you can spend, an hour if you wanted to, reading through all the different features and tools that we have built for traders using our software. So check it out. Also, if you're interested in a trial, you can get one by navigating to the description down below this video and filling out the form there to get information about a trial of the Edge Finder, if that's something that you're interested in. Or you can use the promo code down there and just pick up a copy. If you use the promo code YTVIP at checkout, that promo code will get you a nice subscriber discount. So check it out if you're looking to pick up a copy and you're looking to take your macro sentiment analysis to the next level. Edge Finder might be for you. I know for me, the thing is, it's been such a ride to build this tool, and just hearing from the community over time, tools and features that they want implemented is how we've built this thing. We've just listened to the community. Like, for example, one really popular feature that I actually love to use myself is seasonality. And we built this really simple chart that essentially you select an asset. You can select whatever you want here, and it will show you the 10-year average historical performance of the asset in question. So one of the reasons I like indices, and the AI market scanner has also picked up on this in its technical scanning reading, is that indices have ahead of them a typically, not every year and not a certainty, typically they have a good fourth quarter into the end of the year. There's a little bit of a chase for performance, and I think 2025 is likely to be a repeat event of that. Let me explain something that happened this year for the markets that really, really backs this up, in my opinion. In April, we saw something very interesting happen. The retail crowd actually kind of won big as a collective group when it came to this sell-off. Now, when the stock market sold off in April, a lot of hedge funds, portfolio managers, they actually sold out of their positionings, raising cash in anticipation that we were going to go into a recession, given the circumstance with the trade war stuff. Now, during that time, retail traders, and again, I'm not just saying this off the top of my head. This is the, you can ask or you can look into all the brokerages that reported this information. Retail traders bought the heck out of this dip. They bought big. And again, not every retail trader made money in this, of course, but as a collective group, retail traders bought the dip heavy. And so they actually were the winner in this, which is rare, but they were the winner in 2025. And the big loser was actually hedge funds and portfolio managers who have watched this market drift away up and up and up and have one of the most incredible rally backs that we've ever seen in the financial markets. And so this has been a tough year for portfolio managers. And going into the end of the year, we call this a chase for performance because a lot of these people have to report to their clients what they did this year. And if they have to tell their clients, yeah, we sold your stocks at the lows, that does not look good to their investors. So a lot of it, in my view, for the end of this year is they're going to be chasing into this market to try and say they caught a piece of it so that when they report to clients, when they report to their investors, they don't look silly. And so I think that the seasonality here for the end of the year is still on. That's part of the reason I went long the NASDAQ. So I like the story. Full year seasonality suggests bullishness for, NASDAQ. It also suggests bullishness for other assets, like, for example, Bitcoin. And we're going to get into gold here in just a second. Part of the reason I'm a little cautious on gold at this time is because seasonally, we actually see sideways or consolidation coming next for gold. And gold is, of course, a topic of the day because everybody is watching what happened on Friday, who trades gold with one eye open, one eye, kind of squinting, because we saw the first kind of red day in a while. And we've been on this just bull train to the upside with no breaks whatsoever. I mean, very little pullbacks. Just pull up an RSI. I mean, this is a 4-period RSI, guys. A 4-period RSI is not even, it's barely even coming to the midpoint. 4-period should be jumping back and forth. I mean, that's usually how it behaves, right? You can see a 4-period moving RSI, it's bouncing all over the place. But recently, it's been so incredibly one-sided. This has been such an incredible move for the bulls. And congrats to everybody who has been bullish and riding this trend. I'm, longer term, I am a huge precious metals bull. I love silver. I love gold to the upside for the long term. But as a trader, I do also think that you're playing with fire here. What I mean by that is that if you're chasing gold, if you're buying gold aggressively at these levels, you have to understand that crowd sentiment is very, very bullish on gold. And I think there is probably some healthy pullbacks coming that will wipe out a lot of people who are chasing it with a bunch of leverage and making a huge bet that it's going to keep doing this. Here's a look at the put to call ratio specifically for the gold ETF GLD. This tracks gold prices, and we can see that sentiment actually has started to go back towards the bullish sentiment once again. We've had a couple moments where, people got scared, they sold gold aggressively, but for the most part, we are still seeing some high levels of kind of crowd sentiment buying gold. And I mean, just look at how clean that chart is to the upside. It's been a monster uptrend here for gold. But I do think that crowd sentiment is starting to get a little bit stretched. And so I don't want to try and call a top, and I have not been calling a top on my channel. People have been accusing me of saying, I am calling the top on gold. I'm absolutely not. I've said for months, there's no reason to short gold. There's no reason to chase it either, though. So in my opinion, I've just been very neutral on it, meaning I don't have a buy or sell, bias. It is simply something where I think that if you're a bull, wait for pullbacks. And if you're a bear, if you're bearish on gold, my thought process on it would be wait for true failure from the bulls. Like if you're bearish, I would at least be looking for like a failure at some of these past levels of support. But it's just a tough trade to me and for many people to try and short what is, a monster upward trend. There's not been a lot of money on the short side of gold in the last few years. The easy money has certainly been staying with the trend, not fighting it, and staying bullish on gold. So again, I think you have room. I'm not, again, a bear on gold in the sense that I wouldn't short this thing, but I do think it's very, very possible that you do start to finally get some consolidation and pullbacks, both from a price action stretched perspective, but also seasonally, as we got done discussing. I think that you have a little bit of kind of a tail end of the year cool off, or at least just a pullback, a healthy correction in what is still, in my view, a very strong upward trend. Like, granted, if we got those kinds of pullbacks, if you saw a sharp, pullback to like 3,700, 3,600, 3,500, to me, that's an area where I would look for some longer term opportunities to potentially add some to my long term portfolios. Of course, trading wise, I would need to see what the edge finder says at that time and evaluate at the moment. But for me right now, again, precious metals, love to see this happen because I am very bullish long term and have long term positioning in silver and in gold in some of my portfolios. But in the short term, I think you're due for a bit of a pullback. Again, not willing to short, just looking at it and saying, yeah, there's the easy money here, in my opinion, has already passed us, right? Like, if you've been riding this trend and trailing stops, then wonderful. But if you're looking like, hey, should I be buying it right up here? Well, think about it, right? We could have a very healthy pullback and it would not feel like a pullback. If you chased gold long, this would not feel like a pullback. That feels like a crash. When for normal people who are just like, yeah, give me a pullback, this move is very healthy, right? So again, if I'm looking at precious metals, I think gold is due to have a little bit of a correction, but unwilling to short it as it's in a very strong upward trend. That's my take on it, and we'll see what happens next. Again, we could see another 3 weeks of it going up, but I still would kind of say the same thing where I'm like, okay, yeah, I mean, I can't buy it up here. Got to wait for healthy pullbacks. Just for context here, we'll also take a look at gold on my screener. Part of the reason I don't love gold right now is that we're getting economic growth metrics that actually look strong for the US. Like I mentioned, that GDP numbers. The same reason I'm bullish on the dollar is the reason I'm cautious on gold. Technicals, however, remain very bullish, and that is why I would be unwilling to try and short, the price action in gold at this time. Let's keep going. Take a look at what else we've got. U.S. oil hit some fresh lows here this past week. We went down to 56.30 or so, 56.20 on on U.S. oil. Really, just in a sharp downward trend. I actually, believe it or not, I'm actually bullish on oil from a longer term perspective. I think that there may be some opportunities to pick up some energy stocks for the long term, like buy and hold kind of thing. But if we take a look at U.S. oil, for example, let's just see where we are. You can see technicals are very much in the bear case. Institutional activity, it seems like there's some accumulation going on from the commitment of traders data. Sentiment data, crowd is actually bullish on oil, so that makes me very cautious. Again, there may be more downside to come there. Economic growth metrics are positive for oil. There's been some strength there. Jobs market not so positive, and inflation looks okay because we may get some rate cuts, which would potentially boost economic activity and the demand for oil. So too mixed of a picture. I'd love to see, however, oil prices start to bottom out. And if they did, looking for those breakouts and pullbacks could be opportunities to start looking for longs. But right now, no setup for me on oil prices, and we will continue from there. Let's take a look at our top setups. We'll go top setup simple, see what else is on the list here. I've got everything checked on the box here. So we're looking at a pretty thin watch list. I do want to take a look now at dollar CAD, which I've talked about a lot. Not currently at a level that I can take any trades on it, but I'm looking at, we had a little bit of a pullback on Friday. If we do see some follow through to the downside coming this week, the 38.2% retracement looks really interesting to me for a possible buy the dip. Looking for further upside, and this would be probably my favorite currency pair right now to reflect my dollar bullish bias. If we go back to our economic, let's go right here, economic heat map. Let's go to our surprise meter. What you'll notice here is that the U.S. Dollar is getting a decently high score relative to the low score that the Canadian dollar is getting. We also have other factors that the edge finder is considering, not just the economic data, but also, sentiment data, price action, etc. So dollar CAD is currently one of the, I think it is actually the highest score on the edge finder. So definitely would be looking for some possible longs this week if we did get a further pullback in price action. Pound CAD, just while we're on the CAD stuff, enough is another very high reading. This one actually looks really interesting for a pullback into this area here. If we draw some fibs on this, let's just see if we can get, is this a 38.2% retracement? Pretty close. Yeah. So if you have a little bit more downside on pound CAD, there might be an opportunity here, in my view, to see some upside in that currency pair as well. So I like pound CAD to the upside. Already went through the indices, NASDAQ, S&P. Pound Aussie we'll take a quick look at. If we take a look at GBP AUD, don't love this chart very much. I think you've got kind of a longer term downward trend still that I don't love. Platinum, if we take a look at platinum, I don't usually trade platinum, but we'll just take a look at it. Platinum actually looks really technically beautiful here. That's actually a great setup in terms of, let's go fibs from low to high. Yeah, look at that. You're just about at a 618 retracement. Yeah, platinum actually looks really interesting. Again, not something that I usually trade, but might be on the watch list. You also have the 50% retracement that looks really good. So platinum on a pullback looks really good for this week. And if I take that trade, it would be, out of the usual things that I trade, but that is a beautiful chart with a lot of momentum. And this is this is why I like the Edge Finder. One of the cool things is that I would not have been looking at platinum today, but that actually looks like such a clean setup from a technical perspective, as well as technicals and economic data look okay for platinum. Really interesting. Also, we have Dow Jones on the list. We already talked about the Dow. Pound Kiwi. So let's see, pound NZD. Pull this one up. Price continues to look really strong here. Price action wise, would probably be looking for a bigger pullback on this one. You can see if we draw fibs from here to here, I'd be probably looking at like a 618 retracement, which is, a bit of a ways away on this chart. So interested, but would need to see a pullback on that one. And finally, Euro Pound. Euro Pound actually also one of my favorite currency pairs to trade. What we can see here is that we've actually respected the weekly chart resistance that we've been talking about on the channel with Euro Pound. You can see if we pull out to the weekly chart, we've been sitting right around this 87.50 level, showing some signs of rejection. If we drop down to, again, the daily chart perspective, some rejection on Friday's candle. So I think you may actually have some further downside on Euro Pound. This might be a setup for me to look into and take a trade on Sunday night or into Monday. So really like that setup for sure. Also, real quick plug, if you guys are not in our free to join Telegram channel, let me show you that. So if you're looking to learn more about fundamental analysis, I know, we talk about this stuff all in my videos, but sometimes people don't have the full time to watch all of my videos. If you want bite-sized snapshots of what's going on in markets and things that we're looking for, including short clips, kind of chart of the days, and things that are most important to be looking at right now, consider taking a second to join our free Telegram channel. I'll leave a link in the description down below this video, and I'll also show a QR code on the screen. Check this out. So there you go. On your screen right now, you can see a QR code. If you scan that with your phone, it will take you to the Telegram app if you have it, and you can join our free Telegram channel for fundamental analysis updates throughout the week. That's all I've got here for you guys. If this was helpful to you, make sure to hit the thumbs up button, subscribe if you're new, and we'll see you in the next one. Bye, guys.